Eighth, we need to rein in the Federal Reserve. But as president, on day one, CBDC goes into the trash can. We're not going to allow it.
I think so. I mean, look, it's an area where regulatory clarity is absolutely needed. You've got bipartisan support in Congress and the House and the Senate to kind of get to work, pass legislation, and provide the clarity that the industry needs. And we're excited to be a part of that. The court cases are a part of that. But really, Congress, I think, ultimately is going to have to take up the gavel and get the work done. And we had big bipartisan progress last week, so that was pretty exciting. So the answer, if you take yet another step back, Eamon, and look at the rest of the world, they've answered this quite clearly. What virtually every other major economy has done is they've created a new asset class, which they call crypto assets, or sort of derivative of that. So the European Union, for example, very high standard, very sophisticated regulatory environment. They passed a piece of legislation called the Market in Crypto Assets Regulation, and they created a new asset class. The issue we have in the United States is that we have two different market regulators. You have the SEC and the CFTC, and their jurisdiction is defined by whether something is a commodity or a security. So ultimately, what we have in the U.S. is not a big philosophical question. We have a turf battle that ultimately Congress needs to resolve. And then on the use cases, the answer is pretty clear. You know, on the internet, we all live our lives on the internet. The early stage of the internet, you could get on there and read content. The second stage, which we have now, you can read and write. But what you haven't been able to do is to transmit value. Crypto is the technology that allows you to transmit value. And that value can be concert tickets, it can be gaming points, it can be a security, or it can be the token itself in terms of how it allows you to navigate a particular protocol. And that is a commodity. So I think the answer is right in front of us. I don't think it's that complicated, and I think we should just be careful not to let turf disputes ultimately decide something that at this moment has huge geopolitical significance.
No question.
Well, the tokens each have different functionality and different use cases. So when you hear about like the 25,000 open source code blockchain developers who are hard at work, they're developing applications on different protocols. The tokens are the mechanism by which you navigate the protocols, and so people essentially are buying these tokens in part because of the functionality that they provide and their ability to navigate the Ethereum network or another network. And so
what value does that create? I guess that's the question. What value does that create? I mean, is it a video game navigating the Ethereum network? I mean, I'd say that tongue in cheek, right? I mean, we all know what the Ethereum network is, but what value to consumers does that create at the end of the day?
Well, the value can be in different forms. You can have a token that's ultimately a piece of artwork. You can have a token that's a concert ticket. It's the application that ultimately determines the value. Crypto itself is just simply a technology. It's a way to immutably and permanently record an ownership interest. That's a really big deal. That's a profound thing. And so we'll see the applications develop, whether it's identity solutions, storing of carbon credits, land titling, or whether we were in Colorado, we'd have hunting and fishing licenses on the blockchain. Each of those are represented by a token, and that's a very exciting thing, and the U.S. should be a part of that.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we have Coinbase on CNBC. And we have the CNBC representatives acting like they don't know how powerful blockchain and these digital assets are. When we look at every industry, we know it's going to be tokenized and put on blockchain. We're seeing every single big corporation and big bank globally moving in that direction. And guys, we had Blackstone on Fitch. And of course, they play the Hegelian dialectic. Remember, Blackstone said a long time ago, the United States is going to go a whole decade with no growth, because they knew the fourth industrial revolution was coming, the machine takeover. And guys, we know sanctions are used, inflation is used to make the emerging markets get off the United States dollar. Remember, guys, it's a plan, so it moves in phases. So you're seeing the fall of America to Babylon and the rise of China. And when you look at Fitch versus Moody's and Standard & Poor, we know about Moody's, and especially Warren Buffett. And then we know about Standard & Poor. Guys, we know when the housing crisis happened, they were rating F paper, A paper. These rating agencies were in on the magic trick. Of course, they were in on the last one, so they're going to sit this one out and let Fitch come in. And then, guys, we have the robots, algorithms, and drones we know about to take over the economy. We have crypto, stablecoin, CBDCs are the foundation. Now they're moving in AI, and then we know next comes the robots and drones. So that means that the delivery industry is going to take a 360. And then you add in driverless cars, you add in the robots, you add in drones,
and you won't see a human involved.
And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Several big investors have looked at the downgrade that Fitch gave to the United States long-term debt, kind of askance, saying this is an odd time for it. Fitch did make some good points in why they were downgrading out of things that have happened over the last 2 decades. What are your thoughts on the downgrade and what it means?
Well, nobody expected it. That's the first. Secondly, the numbers justify it. Regrettably, we've had an explosion of debt since the global financial crisis, and we don't appear to have a lot of discipline going forward. We're running huge deficits now. So on the numbers, you can understand why they did it. On the other hand, as Jamie said, because Jamie's always opinionated, I must say, the U.S. is the U.S. We are the reserve currency. We do defend a large part of the world, including people who have AAAs. And when there's a crisis in the world, they buy our securities. Now, that doesn't last forever if you don't keep some discipline. And so, in a way, it's a bit of a shot across the bow. On the other hand, people forget it's actually a split rating. Moody's and Standard & Poor's historically have been the 2 major agencies. One is AAA, one is AA+. I agree it's not going to make a huge difference in really any way for the debt markets, but it is a little shocking when somebody just wakes up and says, I'm not so enthusiastic about your system.
Hey everybody, with AI and automation on the rise, an age-old question is back on the table. Will robots take our jobs or create new ones? Maybe a bit of both, of course. Kate Rogers here to explain. Hi, Kate.
Hey, Tyler, we're here at Zipline in South San Francisco. The company uses robots to change the way deliveries are made to make them both faster and more environmentally friendly. Now, here at their manufacturing facility, workers are working on parts for their autonomous delivery drones, which have been used to deliver vaccines to hospitals and also e-commerce deliveries for big companies like Walmart. Zipline is looking for 100 workers right now in robotics roles, from electrical engineers to data logging to customer application. Its CEO says the technology enables a better paying, safer job for the future.
Before, we were using a human to do one delivery at a time, driving a car one at a time to go and make deliveries. Now we're training that human to maintain and manage a fleet of robots, so that human can now do 50 deliveries in an hour rather than 5. And that enables us to pay that human a lot more. These are jobs that people actually really want.
February of 2019, I got to go with you to MIT, where you made a huge donation for artificial intelligence and really beefing things up because you were concerned about what China was doing with artificial intelligence and the potential for the United States to fall behind. You wanted to make sure that we didn't do that. Where are we in this race right now, and what do you think of all the developments in AI this year?
Well, what I'd say to start is that the call on focusing on artificial intelligence, starting myself in 2015 and doing that large MIT donation to start their new College of Computing, and doing something allied to that with ethics and AI at Oxford, turned out to be the right calls, because that's what's on everybody's mind now. What I'd say with AI, this is one of the most exciting developments of a lifetime.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of the huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Cryptoteacher and the new World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Yashu and Grandma Tanya save New York. From COVID Stories 3, Part 3. King Yashua and Grandma Tanya goes to China.
It's mandatory to get Part 1, Part 2, and Part 3 of this series. It's time to re-educate Generation Z.